Thanks for tuning in. You're watching Markets Tomorrow.
Hi everyone, and of course we will be discussing a lot of the market action, what to do, what's the road ahead. So let's bring on board then our three experts. Ajay Srivastava, CEO at Dimensions Consulting, will be with us on the show. Ashwini Gujral, fund manager, ashwinigujral.com, will be here to take us through all of the technical chart recommendations. And Tahir Badshah, Senior Vice President and Co-Head Equities at Motilal Oswal Asset Management. Tahir, let's start off with you. 66.99 is where we shut shop, and certainly we are seeing that after seeing a massive rally, we're cooling off somewhat. What's the direction that you think the markets will be taking now?
Well, I think it's hard to argue for a direction in the market immediately over the next 10 to 15 days, as you rightly put it earlier, that there's a big event which is coming up, and in my view, I guess market participants, be of whatever you call institutions or individuals, have actually committed to the kind of position they want to have in the markets prior to this big event. Probably be invested to the extent they desire. So there might be funds which are invested to the extent of 90%. There will be some which are fully invested. There are many who are probably not as much invested. But each and every one of us are probably in some way or the other have taken a bet already and placed our bets. So I doubt if that position is at an individual level or at an institutional or a fund level going to change significantly in the space of the next 10 days itself. People will probably wait for the outcome to take it to the next level, up or down. From that perspective, it is very difficult to make out for a trend, immediately prior to this event happening. Moreover, on the other side, we are also seeing a little bit of cool off in fund flow. So I think it's probably a bit of a global phenomenon. We've probably seen ETF related flows cool off quite significantly over the last 2-3 weeks. So that's also probably, if that's not going to come about, then it's hard to argue for a trend in this market, both up or down very soon.
Everyone, I guess, is in this wait and watch mode. Ajay, with less than 2 weeks away from the election verdict, how are you positioning your portfolio? How exactly are you planning to approach the event?
No, I think we are a little more confident than we should be, because three things. One, positions are fairly light at this point of time. I think we are positioned in stocks that could, may react, may not react so much, but could remain a safer bet in the longer term. That is two. Number three is we are still positioned on the side, whether negatively or positively, where the economy is moving. Irrespective of the result, Nikunj, the fact remains that we will have a fiscal deficit more than 5%. We will have 2 or 3 cumulative oil price increases coming in next 1 or 2 months after the new government comes in. We got a whole host of issues which are still to be addressed, and maybe the monsoon doesn't turn around. You might have a support prices plus MSP going up. So our bet is inflation will go up. The mainline stocks in a select industries are going to outperform the market, irrespective of who comes in. Maybe on the pop-up day or whatever the election day, you might see a pop-up which gives you good opportunity to go long or short. But the trick is right now, I think, is to be safely positioned in the places where you want to be, rather than positioned in the places where you think a majority government will take the stocks.
What is it, Tahir, that you would be doing with the capital goods space? Because no doubt we are seeing somewhat of an improvement, but the execution bottlenecks, the thin order book, that continues to remain a bit of a concern. Just a quick word on the same.
We are, in our view, we are reasonably well positioned in the sense that we don't really have a significant overweight, but whichever are the companies that we like from the point of view of medium-term earnings outlook, and where we see a lot of operating leverage, and we're not just talking about operating leverage coming out of utilization of capacity, but basically the ones which have actually been investing a lot and probably have not seen the kind of uptick that they wanted in terms of their volumes, etc., over the last 2 or 3 years. So we are looking for companies which are on the threshold of getting into a new orbit in terms of operating earnings, irrespective of how the final configuration of policies related to infrastructure turn out to be. So I think we've got those 2-3 important bets in the logistics space, in the capital goods space, where there are also companies which are probably having a good amount of export footprint, and therefore should be having a good balance of growth between the domestic and the overseas markets. Some of the names in this sector have gone up significantly in valuation. So to that extent, to argue for everybody in that sector is a little difficult.
Fair point. Ashwini, a very choppy day for Indian markets, Nifty literally all over the place. So based on today's price action, what are the trends which are jumping out?
The last 5 minutes what I am hearing is, how to take a bet on elections. You don't have to take a bet on elections to make money. Which means that if you were sleeping for the last couple of months, I think you can afford to sleep for the next couple of weeks, wait for a correction and then get in. The clear bit is that in 2009, post the rally from 3600 to 4600 on Nifty, we had a correction back to 3900. So let's not make it sound that if you haven't taken a bet or haven't bought any stocks, you missed the bus. Chances are, things are so well priced that you'll hardly have a move on the upside unless it's totally a 300 plus type of verdict. So, while for the next 4 days it'll be choppy, but it's possible to make money. We made money today. If you were in ONGC, if you were in metals, you did fairly well. So there are stocks which are moving higher. But for the moment, the indices will remain choppy between 6650, 6750, and individual stocks is where you do something for the next 4 days. On the 12th, just cut all your positions and wait on the side, and then see on the 16th what you have to do. There is no need to bet on anything, in terms of the event. Just wait for a correction and then go with the trend.
Ashwini, speaking of individual stocks, how is it that you'd approach the oil and gas basket, particularly the likes of RIL and ONGC?
Well, they were good for a trade today, and ONGC is now getting close to the 350 resistance. Many times in the past, 345, 350 has provided huge resistance to it. So if you were in at 260, 270, right now is a good time to take profits off. And even on Reliance, I think from 930 some sort of a move has started. Chances are 980, 985 is possible. But again, it all depends on how choppy the market is. But oil and gas overall is a outperforming space. Even HP BP on declines are a buy. So the levels on HPCL are probably closer to 305. On BPCL are probably closer to 455, 460. So they are already in an upswing even before the market. So another 5 to 8% and you take some profits off.
Ajay, let's talk about the stocks which were really active today, and that clearly had to be the metals basket. But nonetheless, the underlying fundamentals, be it the weakness in the Chinese PMI data, etc., the global commodity prices, etc., does it seem like the weakness or the undercurrent is looking a little bit weak?
See, I think if you divide the two groups, the ferrous and the non-ferrous, very clearly, unfortunately, the non-ferrous part of it is dominated by the Sterlite group, where we always know that the issues with the management have been historical, nothing new. You've seen what's happened in Kane Energy. So you tend to believe that there are not many candidates at this point of time in the non-ferrous segment of a significant kind. Now come to ferrous side. I think the ferrous side between SAIL and Tisco, Tata Steel that you want to choose to, I think the same thing. The run-up has been huge in Tata Steel on expectation of recovery. That's one. Number two is that with the issues with the iron ore mining coming up again and again, and we saw the ban and this 20 million ton cap in Goa. We've seen the Orissa would come up in Supreme Court this week. I think the raw material itself is becoming an issue for the industries, and the import, the cost goes up dramatically. So even if demand turns around, which it may happen maybe, and it will not happen in the monsoon till the monsoon, it will happen in October to December period, the cost is also going up in the same measure for these companies. So a profit turnaround looks to be very much more difficult than a volume turnaround for these companies. So that is why we said to keep away from the metal stocks at this point of time, because the recovery will start first from the consumers and discretionaries before it goes on to the metals and the end of the story. Okay. You may guess it again, you may buy forward for it, but that buying forward is for a horizon October to December, so you would tend to go short if there is a market which is a spike happens in the shares rather than go long in a spike.
Tahir, whereas we only tend to discuss IT or exporters when it comes to defensives, off late consumer stocks are also taking it slightly easy. the volume dispatch numbers which have come from auto companies, the same store dispatch numbers which have come from retailers, or the volume growth number which have come from FMCG companies, they don't inspire too much of confidence. Are you getting a sense that Indian consumer is slowing down?
Probably yes. Although the reasons for the two segments are probably different, especially over the last 2-3 months. So consumer goods and FMCGs, non-discretionary probably is slowing down clearly. But in autos, I'm not too sure if that is the case. It is probably more on account of disruptions on account of elections, etc. as well. Maybe even the weather-related issues. So I think that has probably affected more of the auto stocks. In fact, there are a couple of the auto companies which have done pretty well in terms of volume growth, like for example a Hero Motors or even a TVS Motor for that matter, even Honda motorcycle for that matter. So I think there are certain segments of autos which are probably slowed down. But clearly, if you were to look at probably the results of most of the FMCG companies, the large as well as some of the mid-sized ones, they've all shown a distinct softness in particularly volume growth, and that is something which is indicating at a slowdown in consumer spends.
Ashwini, what would you do with some of the mid-cap IT names that took a back seat today as well as the frontliners?
See, I don't look at mid-cap IT because they don't follow any sort of trend, and basically even large-cap IT is getting fairly beaten up. Senex IT is ranging between 9200 and 9550. So if we start breaking 9200, then it's likely to test its 200-day moving average towards 8900, 8950. But still no sign of clear bottoming out or buying that's coming in. I think more selling should be round the corner if rupee continues to threaten levels of 60 on the upside.
Is there still money to be made, Ashwini, in oil marketing stocks? If strength in rupee is bad news for IT, it is good news for OMCs.
See, like IT could do no wrong in the last year. I think OMCs finally are in that sort of a sweet phase where everything is going for them. Plus there is a PSU bull market. Plus there is an oil and gas flavor. So definitely on all declines, and they recently had a decline, these stocks should be bought, and chances are in the next few years they should see at least another 30 to 40% upside from the current levels also. So finally these stocks are breaking out on a longer term basis and should be bought on all declines.
Let's find out then what exactly the dealing rooms are talking about. Gargi joins in from our research desk. Gargi.
Well, firstly, talk about a Torrent Pharma and, some FIs building position in that counter. Earnings are expected to be pretty robust for Torrent, and probably on the back of that, we will see some buying coming in the following days too. If you look at the volume action also today as well as the last 2 to 3 trading sessions, there has been a slight uptick. So keep an eye out for that one. The other one is Tata Steel, What an interesting move in that counter. Last 2 days, we were seeing pretty much, selling pressure coming in for Tata Steel. But today we saw some recovery, not only in Tata Steel, but the entire BSE metal pack, despite, weak manufacturing numbers from China. But some, dealing rooms and some institutional, they're suggesting that there could be further buying, because once the stock breaches that 400 level, at 394, 395 kind of levels, usually there is good value buying that we see in Tata Steel. Earnings also, remember, for the fourth quarter are expected to be good. That's contrary to the general belief that the European numbers will be bad. So overall, it is going to be a buy recommendation from dealing rooms for Tata Steel as well as a Torrent.
Gargi, thanks a lot for that. Ashwini, how do you propose one should trade tomorrow morning?
Well, I've given you the boundaries 66.50 to about 67.50. Try to trade the ranges, keep it light, and go with the sector which is showing the most amount of strength. In terms of stocks, Bank of Baroda is a buy with a stop of 800, target of 845. Adani Enterprise is a buy with a stop of 424, target of 446. And Titan is a buy with a stop of 256, target of 272.
Ajay, market insiders are telling me that you're buying into Jubilant Foodworks, and when I heard that, my first reaction was, for someone who's completely focused on PE, why is he buying one of the most expensive stock which is listed on on Indian exchanges?
See, every company's, there comes a time in every company's life when there is an inflection point. Inflection point was negative for a long time. It gets sliding down. We believe that the Dunkin' Donut franchise will revive itself. The pizza franchise is not slowing down. One would not say slowing down so rapidly, but yes, it's slowed down, but so has the valuation of the company. And number three is that we have now found that if you look at the competitors, they have into a price war at this point of time. You've seen everybody announcing a price war, whether it's McDonald's, whether it is Pizza Hut, everybody. We don't believe it's sustainable at all. So come the price war ends maybe 3 months, 6 months down the line, this company could be well positioned to take back the leadership. On distribution, let's be honest, it has a pure, simple leadership in this country. No other fast food chain has been able to even come close to it. And therefore, one would believe that if any turnaround happens, the price war stops, this will be the first gainer in the market. Now, our call may be wrong, but we believe at the pricing that has now come to, and maybe if it goes down another 10-15%, becomes a better opportunity for us, it could represent one of the first leading candidates to buy into a so-called India revival story if it happens.
Tahir, in your last declared portfolio, what was the last big acquisition? And in terms of in stock allocation, after the recent market run-up, where have you increased your allocation?
Essentially, basically built out our mid-cap portfolio compared to the large cap where we were almost fully invested. And so to that extent, our action has been concentrated more on the mid-cap side. But broadly speaking, I think incrementally where we keep nibbling and buying more of on a daily basis is private banks, some of the select auto companies in the two-wheeler as well as in the four-wheeler space, and upstream oil and gas. So these are the three amongst the larger cap sectors which we prefer. In the private bank space, it is basically the likes of HDFC Bank, Kotak, and ICICI Bank. Whereas in case of autos, it is essentially Hero, TVS, and Maruti. So these are the places where we've essentially been building out. On the mid-sized companies, we've got basically opportunities in some of the pharma names like Ajanta, Epca, etc. And some of the industrials like Gujarat Pipavav Port and some select auto ancillaries as well.
Tahir, Ashwini and Ajay, gentlemen, appreciate your time. Thank you for joining us. It was a pleasure to have you in this edition of Markets Tomorrow.